What's shaking, crypto fam? Bitcoin Bulletin is live and the news cycle is absolutely exploding. We've got institutional giants making power moves, blockchain innovation hitting warp speed, and even the looming specter of quantum computing forcing a massive security shakeup. This is not your average market update. This is where the future of finance is being forged in real time, and you absolutely do not want to miss a single second. Get ready for the unmissable updates that will shape your portfolio and your understanding of this revolutionary space. Stick around because the clock is ticking and the market never sleeps. First up, we're diving deep into the latest developments surrounding the Sway blockchain, where a critical price resistance level could unlock a monumental breakout, fueled by major institutional accumulation and innovative Bitcoin DeFi integrations. This is a game changer you need to see to believe. Then, we're hitting you with the hard data on Bitcoin's current market position. Is the king coin consolidating, or is something bigger brewing beneath the surface? We've got the analyst insights that could tell us everything. Next, we're exploring the profound shift happening in how institutions are interacting with Bitcoin. Forget speculation. We're talking about stewardship and a complete makeover of how the big players view this digital asset, with trillions in play. And finally, a chilling but crucial update. Quantum shadows are lengthening over Bitcoin, and regulators are in a frantic race to secure the future. What does this mean for your holdings and the very fabric of blockchain security? We've got the full breakdown. Don't go anywhere. Hit that like button, subscribe, and ring that notification bell so you never miss a beat. Let's get into it. Sway eyes $10 breakout amid Bitcoin DeFi. The Sway blockchain is showing significant bullish momentum, consolidating within a wedge pattern that analysts believe could lead to a substantial price breakout. Currently trading between $3.03 and $3.04, Sway is on the cusp of a critical resistance level at $4.03. A decisive breach of this level could pave the way for a remarkable $10 price target, a significant leap from its previous all-time high of $5.35 in January 2025. Conversely, failure to overcome this resistance could see the price retracting to the $3 support zone. The underlying fundamentals supporting Sway's potential rise are robust. Institutional investors are actively accumulating the token, with Sway Group holdings recently increasing its stake to over 101.7 million tokens, valued at approximately $332 million. This significant accumulation, coupled with its listing on Robinhood, has broadened accessibility for retail investors and amplified Sway's market presence. Furthermore, Sway's ultra-low and stable transaction fees, averaging a mere 0.00799 in August, present a compelling cost-effective alternative to platforms like Ethereum, where fees can often exceed $1. Technically, the market is observing mixed signals. While the weekly chart indicates an ascending triangle pattern forming around the $4.03 resistance, suggesting a potential bullish continuation, the 4-hour chart reveals a descending triangle. The token is currently navigating challenges in maintaining its position above the 50-day moving average, with potential support identified at $3.42 and $3. Analysts are keenly monitoring the weekly close above $4.03 as the key indicator for a confirmed breakout, while a drop below $3.42 could signal a reversal. Adding to its appeal, Sway is making significant inroads into the Bitcoin decentralized finance DeFi ecosystem through its integration with TBTC. The Threshold Network's Phase 2 TBTC deployment on Sway is enhancing cross-chain capabilities, allowing Bitcoin liquidity to be leveraged for lending, trading, and yield generation strategies. Over $10 million in TBTC liquidity has already been supplied on AlphaLend, with substantial borrowing activity indicating strong demand for Bitcoin-backed credit markets. Enhancements like new liquidity pool, pairs on Bluefin, and auto-compounding features on AlphaFi are further boosting composability and user engagement within Sway's burgeoning Bitcoin Fi ecosystem. These advancements underscore Sway's strategic positioning in the Web3 space, particularly as data privacy and composability become paramount. With a total token volume exceeding $600 billion and increasing social dominance metrics, Sway is emerging as a preferred infrastructure solution for developers and investors seeking high throughput, low costs, and enhanced privacy features. The trajectory towards a sustained breakout hinges on its ability to decisively overcome the $4.03 resistance level. But is this breakout sustainable or just another flash in the pan? Stick around as we break down Bitcoin's current market strength. Bitcoin trades flat at $110K amid record hash rate strength. Bitcoin has maintained a stable trading position around the $110,000 mark, with analysts pointing to the cryptocurrency's record high hash rate as a key indicator of underlying strength and a potential catalyst for future recovery. This sustained network security, measured by the total computational power dedicated to mining Bitcoin, suggests a robust and resilient ecosystem, even amidst periods of price consolidation. The current market sentiment indicates that while Bitcoin may appear to be trading flat, the underlying network health is exceptionally strong. The hash rate, which reached unprecedented levels, reflects a significant increase in mining participation and investment. This enhanced security layer is often interpreted as a bullish signal, demonstrating the network's growing capacity to process transactions and resist potential attacks. It provides a foundation of confidence for investors, suggesting that the infrastructure supporting Bitcoin is more secure and powerful than ever before. Analysts are closely observing these metrics to gauge the potential for a price rebound. The correlation between a rising hash rate and subsequent price appreciation has been a recurring theme in Bitcoin's history. As more computing power is deployed to secure the network, it not only increases its security, but also signals growing confidence from miners, who are essential stakeholders in the Bitcoin ecosystem. This confidence often translates into a more stable market environment, potentially attracting further institutional and retail investment. The broader market context, characterized by dynamic cryptocurrency price movements and the need for reliable information, places a premium on understanding these fundamental network indicators. While the price may fluctuate, the consistent growth in hash rate provides a counter-narrative of underlying strength. For investors navigating this volatile landscape, insights from metrics like the hash rate are crucial for making informed decisions. Discussions around market dynamics, including the performance of indices like the Sensex and Nifty, highlight the general interest in financial markets. However, within the cryptosphere, the hash rate stands out as a specific, fundamental metric for Bitcoin's health. The continuous subscription alerts for financial news and investment strategies underscore the demand for timely and accurate data, which Bitcoin's hash rate data certainly provides. While the network strength is undeniable, how are the big players stepping up their game with Bitcoin? We're about to find out. Bitcoin's institutional makeover, from speculation to stewardship. Institutional investment in Bitcoin is undergoing a significant transformation, moving beyond mere speculation towards a more strategic approach centered on stewardship and long-term value. This evolution is marked by critical developments in custody services and a surge in Bitcoin exchange-traded fund (ETF) inflows, collectively reinforcing the growing legitimacy of Bitcoin as a credible asset class. U.S. Bank has recently recommenced its Bitcoin custody services, now extending support to institutional investors holding Bitcoin ETFs. This expansion, facilitated by a partnership with NYDIG, signifies the bank's commitment to embracing digital finance innovations and catering to the escalating demand for crypto-related investment products. This move mirrors similar explorations by other major financial institutions, such as Citigroup, indicating a broader industry trend towards integrating digital assets into traditional financial infrastructure. The growth trajectory of Bitcoin ETFs is particularly noteworthy. Assets under management, AUM, for leading Bitcoin ETFs have soared, nearing the $160 billion mark, a figure that rivals the $180 billion AUM of gold ETFs. BlackRock's iShares Bitcoin Trust has emerged as a dominant player, surpassing $80 billion in market capitalization. This phenomenal growth underscores the increasing institutional acceptance of Bitcoin as a viable store of value and a hedge against macroeconomic uncertainties. Daily inflows into spot Bitcoin ETFs have remained consistently strong, with recent figures showing net inflows of $332.7 million on a single Tuesday, driven by major asset managers like Fidelity and BlackRock. Supporting this influx of institutional capital is the rapid advancement of digital asset infrastructure. Platforms like BitGo are instrumental in providing comprehensive solutions that encompass custody, trading, and risk management, addressing the complexities associated with scaling digital asset products. BitGo's offerings, including seamless integration, deep liquidity pools, and institutional-grade staking capabilities, empower exchange-traded product (ETP) issuers to expand their services while ensuring regulatory compliance and operational efficiency. The growing interest extends beyond Bitcoin, with discussions increasingly including Ethereum and other digital assets, alongside staking-enabled strategies and index proposals. Market analysts emphasize that the increasing institutional embrace of Bitcoin is propelled by both regulatory advancements and Bitcoin's growing recognition as a long-term asset. While its track record is shorter than gold's, Bitcoin's adoption curve is remarkably steep, driven by speculative interest and macroeconomic factors. The substantial growth in ETF AUM and Bitcoin's recent price highs suggest a growing parallel with gold, particularly among younger, risk-tolerant investors. However, a key distinction remains. Central banks continue to be significant buyers of gold, acquiring over 1,000 metric tons in 2024, whereas significant institutional buying of Bitcoin by central banks has not yet materialized. Looking forward, the institutionalization of Bitcoin appears poised to enter a new phase. Entities that develop sophisticated strategies beyond simple asset holding, focusing on active capital allocation, rigorous risk management, and yield generation, are expected to gain prominence. These forward-thinking organizations could potentially become the new generation of institutional stewards within the Bitcoin economy, building the foundational infrastructure necessary for sustained institutional trust and growth. As the market matures, the distinction between speculative and institutional Bitcoin balance sheets will become increasingly clear, paving the way for deeper integration into the global financial system. But with this institutional embrace comes new challenges. Are new threats emerging that could jeopardize Bitcoin's future? We'll explore that next. Quantum shadows loom over Bitcoin. Regulators race to secure the future. The potential impact of quantum computing on blockchain security, particularly for Bitcoin, is prompting urgent calls for action from regulators and proactive measures from key players in the digital asset space. The U.S. Securities and Exchange Commission, SEC, is being urged to integrate quantum-resistant cryptographic standards into its oversight framework to safeguard digital assets against future quantum threats. The underlying concern stems from Shor's algorithm, a theoretical quantum computing method that, if executed on a powerful enough quantum computer, could break the elliptic curve cryptography, ECDSA, currently securing most blockchain networks, including Bitcoin. This vulnerability could compromise private keys, potentially jeopardizing the security of digital assets. Recognizing this future risk, El Salvador has taken a significant precautionary step by distributing its $682 million Bitcoin holdings across 14 separate wallets. This diversification strategy aims to mitigate the risk of a single point of failure in the event of a quantum attack by reducing the exposure of any single address to potential compromise. El Salvador's approach exemplifies a growing trend within the crypto industry to prepare for quantum computing threats proactively. The nation's Bitcoin office has explained that by utilizing multiple addresses with hidden public keys, the risk of any single address being targeted by a quantum attack is substantially reduced. This method is viewed as a crucial long-term security measure, even though practical quantum computing capabilities are still in their nascent stages. Simultaneously, major technology corporations are accelerating their development of quantum-resistant solutions. Companies like Microsoft are advancing quantum processors, while Google Quantum AI is making strides in quantum error correction. IBM has set a target to deliver a large-scale, fault-tolerant quantum computer by 2029. These advancements highlight the increasing recognition of quantum computing's transformative potential, alongside its significant cybersecurity implications. As the SEC's CAMT task force deliberates on digital asset regulation, the imperative to incorporate quantum-resistant measures into its framework has intensified. Experts caution that the transition to post-quantum cryptography needs to commence immediately to preempt future vulnerabilities, advocating for collaboration between the SEC, private sector leaders, and academic researchers to ensure a unified and proactive response. In parallel, the broader crypto industry is adopting a strategic approach to quantum security. This includes investing in companies specializing in quantum-resistant encryption, such as Arctic Quantum, and supporting firms like NVIDIA, which are integrating artificial intelligence and quantum technologies. While the quantum computing market is still developing, with projections estimating a market size of up to $131 billion by 2040, early investments in quantum security infrastructure could provide substantial long-term benefits for both regulators and investors. And that's a wrap on today's critical updates. But before you go, let's do a quick recap of everything we covered. All right, crypto crew, what a session. We saw Sway eyeing a massive breakout fueled by institutional moves and Bitcoin DeFi, Bitcoin holding strong with a record hash rate, institutions fully embracing Bitcoin as a long-term asset, and the looming quantum threat pushing for a security race. You've got the intel, now go make informed moves. If you found this packed with value, smash that like button, subscribe for more deep dives, and don't forget to ring the notification bell. Follow us on all our socials for real-time updates and join the conversation. We'll see you in the next one.